Good morning, traders. In this video, I'm going to show you my day trading plan for the current market conditions. We are in a very unusual market right now. We have the S&P 500 trading at all-time highs. The NASDAQ just broke out. So this is the NASDAQ chart. This is the daily chart. You can see that for quite a while now, it's been trading inside of a range, and then it hit the top of that range. You would think, okay, it's probably going to come back down. It didn't. It broke out through those highs, and it's heading higher. Today, it's in a little bit of a pullback, but who knows what the future holds for it. I don't have a crystal ball. And then we look at the SPY, and not the same story at all, just continuing in this uptrend. This is the new year, so we're in a long-term uptrend with the SPY, but also kind of headed sideways here. If you just kind of check out the high here, and then the high here is not much higher, and now we are just barely breaking out through those highs, and who knows where we're going to go. It looks like we're kind of printing a couple of doji candles here, so there's some uncertainty, at least as far as the candlesticks are concerned. But anyway, the main thing is that I want to be trading safer stocks right now. I don't want to be trading the low float, small cap, crazy stocks. Things are just too uncertain, too unreliable. So my day trading plan right now is focused on mid-cap stocks. If we look at the screeners I have set up on Webull, I have one for each cap size of a stock. If you look up market capitalization on Investopedia, then you'll see what I'm talking about. But let's start with the large cap one, because that's the one that I have up right now. If we organize the list by percent change, you get a sense for the volatility of large cap stocks. Now, yes, the top one, SPCE, is pretty volatile today. This is barely a large cap stock. It's really more of a mid cap. And I think it kind of just made its way up into that mid cap level. It's around 12 billion market capitalization. So that one's a little bit of an exception, but you can see immediately as you go below that, we're looking at single digit moves here. If we go down to the mid cap screener, you're going to see a pretty different story. You have to hit modify in order for the filters to activate or to be applied. And if, again, I organize that by percent change. Here we have 37%, 22%. These were a little bit higher, I think, a little bit ago, or maybe I'm thinking of the small caps, but still higher than the large cap, just not that crazy. And then the small caps, you're going to see many more double-digit moves. So let me hit modify to activate those filters. You can see the difference in the market capitalization organized by percent change, and then look at all of these double-digit moves all the way down to at least like the 10th stock. So that shows you that there's a lot more volatility in the small cap and lower float stocks. So that's why right now I'm trading these mid caps only, because they historically are more reliable and obviously less volatile, and that's what we're testing right now. We can't be sure of this until we take 100 trades. That's why I'm tracking my trade so far on this spreadsheet. We'll go over that in just a minute. But this is the plan. So it's all or nothing to our mid-cap stock. So that means that no matter what, I'm either going to be taking a 2R profit target, 2 times my risk, or stopping out at 1 times my risk. And I'm only going to be trading the mid-caps. This is basically a summary of why I'm trading this plan. And these are some reminders that are really important. Check your internet connection. Even if you have this little symbol saying you have internet access, there may be a chance that your upload speed is down. That happened to me at least twice. So I always run this speed test, and I make sure that my results are the typical results. I usually get around 120 megabytes per second download speed and about 6 megabytes per second upload speed. If I see anything that's far away from those numbers, then I don't trade, because your trading platform is only as good as your internet connection. If your internet connection is no good, then you're going to have serious problems. So there you could see I'm getting the typical results. So there's nothing to stop me from trading. Unlock the platform. That's just a reminder. This thing gets locked when you open it, and everything looks the same. When I'm on my charts page, there's no indicator saying that I'm not unlocked, and then I go to hit a to take an entry. I'll show you an example right now. Let's say I want to get in on this stock, and I trigger my hotkeys, and then I get this notification, and I'll miss the entry. So I have to remember to unlock the platform. So that's what that's about. Really important, because you could miss an entry. Read through your plan daily, extremely important. There's things in my plan that I haven't seen happen in say 3-4 weeks. But what happens if it happens tomorrow, the next trading day? Am I going to remember what to do? Not if I'm not reading my plan every day. So it's super important to read your plan every day, because you will get blindsided once in a while by the stock market. And are you going to remember what to do? I don't know. It depends on whether you're reading your plan or not. So another great reminder, it's always possible there will be no trades to take. Now, this is a really important thing to keep in mind. This should be in your plan. Hopefully you have a written plan. If you don't, you really need one. Otherwise, you're just throwing darts out there. You don't know what you're doing. You don't know if what you're doing works. Green trades don't mean good trades. I can tell you that right now. So it's always possible there will be no trades to take. And that means that if there's something on the edge of my plan, I have to just sit on my hands and wait. If my criteria is not met 100%, I can't trade it. I have to be willing to accept that there may be days where there are no trades to take, and there has been already, even with this plan, and that's fine. I'd rather have a no trade day than a red day. Max number of trades, 3. This is new. I just added that today, because before that I was allowing myself to take up to 10 trades. I haven't gotten anywhere near that with this plan, but I have noticed that so far all of the trades after the third trade have been red trades. Not that many trades here, so this may be a little bit of a kind of a trigger happy move to make this change so early. But right now, the trading is so crazy that I'm just trying to play it as safe as possible. You can see my win rate after 3 trades is profitable. 33% is break even. But right now I've been taking more than that, and my win rate is below that level. So this even includes error trades and all the red trades and everything. And it's profitable, but my actual results right now are below break even because of those trades that I've taken after the third trade. So that's where that rule is coming from. I'm going to see if we can bring the win rate up with that rule. And we're going to stop trading after the first 2 are trade or 3 losses. This is an old rule that I've been following for a long time. It's a very good rule. If one of my trades hits the 2-hour profit target, I don't want to continue to trade and risk giving back the profit or turning a break-even day into a red day. And of course, all 3 trades can fail, and that's why I stop after 3 losses. If you miss an entry and your would-be target price or stop has not been hit, you can only enter if the price comes back down to your exact entry on the penny. This is a really important new rule. This happened to me last week where I missed an entry and the setup looked very good, and I decided to get in on the retest, but the retest did not come all the way back down to my price. I got in a few cents above, and then I just missed my profit target by a couple of pennies because I didn't wait for the price to come all the way back down. It did come all the way back down. It would have given me the opportunity to get in at my desired entry, and I would have been green on that trade. And that day would have been a break-even day, but instead it was a red day because I didn't wait until it came back down to my entry. So that's what that's about. This is all old stuff. If point C drops below point A by even as much as 1 cent or a wick, then you can't take a trade. So that's just telling you that the ABCD pattern has failed. I have a video about the ABCD pattern. If you're not sure what that is, you can just search on my YouTube channel. And this is all pretty old stuff from my older versions of this plan. So you're probably familiar with this if you have been watching my videos. If not, you can ask me any questions about any part of this plan in the comment section below, and I will answer in more detail. Here's our max share price for now. And yeah, again, all this stuff is pretty old. This is my definition of a pullback. All of this kind of comes from trading low floats and small caps, and it's not working out quite as well right now, so we might have to adjust that. Stop after 3 losing trades. That's important. It's redundant. You want redundancy in your plan, especially for the big important rules that can cost you a lot of money if you don't follow them. And here's my screener criteria. There is one important adjustment I made. If there's no 200 MA line, watch for entries if there's a lot of volume and there's higher lows overall. So that means that if I'm looking at a stock that hasn't been trading for 200 days, maybe it's a new offering, it's only been trading for a few months, there's no 200 MA line. Well, what if it's trading with higher lows overall? Then that means that it's still in an uptrend. So if there's volume, there could be good opportunities to take trades. If my setup and my criteria are met, I can still take a trade without a 200 MA line being present. Mark out the previous session and previous day high. That's an old one. You should understand what that means if you're watching my videos. This is a new one, very important. If a stock has gapped up, there must be a trend connecting it during extended hours. Don't trade stocks that have huge gaps during the extended hours like RAVN. So that happened on June 21st. I have a video showing that. You can check that out if you want to. I copied and pasted the screenshot of the chart because I want to always remember, not to trade stuff like this. This is a crazy gap up from $38 to $57 during the after hours. This is the 1 minute chart. So it's not really like, a gap from, say, the the end of the previous trade day to the open of the next day. Those kind of gaps can be good if you look at the pre-market and after hours and you see, kind of stair stepping or just a trend to that upside. That's a good gap. But when you have a gap like this on a 1 minute chart, that's really fishy. And these trades almost never work out. And you can see what happened is it just traded sideways and stopped me out of a couple of trade attempts to make a 2-hour profit target. So those are to be avoided. This is my criteria for taking a trade. Most of this is old stuff. You can read through it again. Ask me any questions in the comment section. Number of trades. For now, I can take up to 3 trades from 9:30 to 10:30. Most of this is older stuff. Again, some redundancy of the very important rules. And this is just me talking to myself. It doesn't really mean much right now. Once you've hit 3 trades, so this is just to remind me to shut down Webull once 10:30 has been hit, whether I have trades open or not. And stop outs and re-entries. This is really important because if you get stopped out of a good setup, it does not mean that you shouldn't get back in, because if it's a good setup, then it will likely hit your profit target. Maybe you got shaken out. It's choppy where you entered too early. So that's what this is all about. Very often I've entered trades, gotten stopped out. On the second time it's hit my 2-hour target, or the third time it's hit my 2-hour target. Statistically, if the setup is good, the second or third time is much more likely to hit your target if the first time did not. So lastly are the rules. Well, almost the last thing. Just read through these. Let me know if you have any questions about those. This is probably the most important rule that's really affected my trading. If you break rule number 1 or do anything intentionally outside of the plan, you must stop trading for the rest of the month. That has been one of the best ways to keep myself trading within my plan and my rules. Once I made that rule, then I've really never broken my plan since. And then the ABCD pattern, the little graphic down here, I like to have this at the end of my plan to remind me what I'm looking for. This is the previous high. Here's point A. Breaking through the previous high. This is point B. Now the pullback to point C, and then I'm just waiting for a 1 minute candle to make a new high, getting in, hoping to ride it to a 2-hour profit target. My stop loss would be usually the low of the previous candle. And other than that, that's pretty much the entire plan for right now. We are trying to prove if this is profitable or not. We're 21 trades into it. Not quite to profitability yet, but looks like with some slight modifications it can be. This is the win rate. If I stop after 3 trades, it's profitable. The win rate without errors, even with all of those trades, beside the error trades, is slightly profitable. But this is looking like the best setup so far for this plan. So that's what we're going to be doing next week, is just taking 3 trades no matter what and stopping even if all the 3 trades failed. So the beauty of this is after 21 trades, I've only lost $1.58. So you don't need to risk a lot of money to find out if your plan or your strategy is going to work. You should just be trading with 1 share unless you're proven profitable in the long run. I've been trading for 13 months now. I've had green streaks, I've had red streaks, everything in between, and I would not consider myself profitable long term yet because I haven't been trading long term. Long term is multiple years. You need to be trading year after year after year. So I'm trying to show you guys that you don't need to risk a lot of money. You don't need to blow up your account in order to find out if you can do this or not. If you can't make money, or if you can't at least have a profitable win rate, because when you're trading 1 share, you're not going to be trying to make money. I could still be red P&L wise and show that this plan is profitable by showing a win rate better than 33%. So if you can't show that your plan is profitable somehow by either your win rate or your P&L, then you shouldn't be taking on anything larger than 1 share. If you want a little bit more than that, maybe 5% of your account. 10% I consider already a full position size, so you shouldn't be trading with 10% unless you are proven profitable with at least 100 trades or more. Then you still need to be proven profitable long term. So that's another thing. But at least if you've proven profitable with 100 trades at one share, you can increase your position size to half or full position size and continue to trade that until you learn otherwise after those 100 trades. So anyway, let me know if you have any questions about this. Hopefully I didn't ramble on too much. The main idea is you need to have a plan. You need to write it down. You've got to follow it. Every single trade that you take, you got to follow the plan 100%. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.